But let's focus on individual stocks. We've been talking about the pressure on soft commodities today. Natural rubber prices apparently have also been scaling off. Anant Goenka of CEAT joins in to talk about that. Mr. Goenka, morning. First, could you just put into perspective how much the slippage has been in natural rubber prices and how much of an impact that's had for you as a tire manufacturer?
Yeah, there has been some reduction in international rubber prices, primarily in the Indonesian block rubber market, where prices were around 240 rupees per kg, 250 rupees per kg. It has now come down to 200 rupees per kg. In the domestic market for tires, we use RSS4 quality rubber, which has come down from about 238 or so at its peak to now about 220 rupees per kg. Overall, margins for us have been under pressure. Our margins have come down until Q3. Q4 expects to be even lower margins. However, going forward with this kind of reduction in rubber, we expect to see some relaxation in our margins, although it's too early to say. Perhaps on the other side, we do use a lot of crude based products, and that has been going up. So net we still have to wait and see how rubber behaves. If there is a further reduction, we can see some relaxation in our margins.
How much is the threat from Chinese imports now, Anant? Has that reduced a bit, or does it still remain a big pressure on the industry?
Chinese imports, it is, I would say, perhaps a little bit more of an irritant for us. The government has taken some good steps in imposing anti-dumping duty, etc. But currently it is not really a major threat. It is more of an irritant for the tire industry. They have a certain niche of very low cost tires that they do supply, and there is a certain market for that, but they will be restricted, according to me, to a certain market share of perhaps 5 to 6%.
There was some talk about you selling land in Bhandup. Can you give us an update? Has there been any progress on that front at all?
For us in Bhandup, right now Bhandup for us is our largest plant. It would take at least about 1.5 to 2 years by the time we really set up another plant to replace Bhandup. So that work hasn't begun yet, and we have acquired some land in Ambernath, but it would take at least 1.5 to 2 years by the time the new plant has come up, and then we could look at some kind of movement, etc. But it's still too early to take a call on that. We've not taken any final decisions yet.
So any elbow room in terms of hiking prices because of the margin pressure you're feeling, Anant?
Currently, with rubber easing off, we haven't taken a decision yet on price increases. However, if depending on how rubber behaves, so if it continues to slide down, which we expect there to be a little bit of easing in the next few days, we might not look at taking any price increases in the near term. But in the longer term, certainly we would look at something around May, June kind of time period. That's when the summer months are. That's when the tire demand is strong. So we could look at some price increases at that time.
Thanks, Anant, for joining in this morning. That's CEAT saying that natural rubber prices have moved lower, but they're still struggling a bit on the margin front. Let's take a break on that note with the news that the mid-cap index just broke into the green and the frontliners have gone about flat. So not a very bad start to trade this morning. We'll be back.